cryptocurrency current marketplace. We closed the first one, $5 million of Bitcoin, Ethereum, a mixture, mostly Ethereum. And now we're getting a wave of individuals who are finding us. You might be finding us right now. So one of the biggest challenges with folks who are selling cryptocurrency is they want to be able to diversify. They want to be able to time the real estate market and or even the crypto market. They want to be able to have some liquidity, some cash flow. And so part of this vision is helping our clients who are in cryptocurrency buy investment real estate, all tax deferred, using the Deferred Sales Trust. Also invest with Jake Miller as the financial advisor in a diversified investment grade securities, start a business, whatever the outcome that you want to do. Why is it that you're investing with any type of asset? And what if you could sell high, diversify, and buy back in whenever you'd like to? So this is what we've already done and we're doing. We've already proven it. In fact, there's a story I wanted to read to you guys, and I'm inspired by it because I was telling Rebecca about this book, and it's by a gentleman named Russell Brunson. It's called Expert Secrets. Okay, if you haven't read it and you think you want to level up your consulting and sales and teaching ability, this is, I believe, probably might be the best book I've ever actually read on this. And I'm just going to read this opening part of this chapter here, and this will give us some basis for what we're talking about here. All right, so here we go. Okay, it says, for generations, people believed it was impossible to run the mile in under 4 minutes. They believed the human body wasn't capable of going that fast and that it would collapse under the pressure. Some doctors and scientists said it wasn't just hard or dangerous, but physically impossible. No one could run a mile in under 4 minutes. Then, on a cold, rainy day, May 6, 1954, 6 men entered a race held at the Iffley Road Track in Oxford, England. One of these men was Roger Bannister. As he crossed the finish line that day, he did something that was thought to be impossible. Over the loudspeaker, the announcement came, ladies and gentlemen, here's the result of the event. 9 and the 1 mile subject to ratification will be new world record. The time was 3. The announcement was drowned out by the crowd when they realized it was under 4 minutes. Bannister had finished the race in 3 minutes, 59 seconds. He had done what so many people believed was impossible. He broke the 4-minute mile. It says, after that record was broken, it was held up for only 46 days before it was broken by John Landy. Once people saw it was possible, it created belief in others that they could do it too. Since that time, more than 1,400 runners have broken the 4-minute mile. So what I love about this story is that for decades, maybe hundreds of years, maybe thousands of years, no one believed that the 4-minute mile could be broken. And then it was broken. And then within 45 days, literally another handful of men broke it. And now 1,400 more people have broken it since 1954. So I believe that is where we're at with this cryptocurrency current marketplace. We closed the first one, $5 million of Bitcoin, Ethereum, a mixture, mostly Ethereum. And now we're getting a wave of individuals who are finding us. You might be finding us right now. We have Jake and I have a Bitcoin, strictly Bitcoin, by the way, very strictly Bitcoin engagement that's been signed for which will be a new client of ours. We're looking for numbers, looking for about a $54,000 exit price. But that being said, that will be another multi-million-dollar Bitcoin case, as well as multiple other clients. And we believe in the next 45 days, this has opened up a kind of a floodgate of folks who want to capture these values. And like Roger Bannister, we've broken the impossible, we believe, which is deferring capital gains tax in a way that's very elegant. I'm going to pause there. Jake, what do you think?
All right, everybody. Welcome to another mastermind here. I'm so excited to have you guys and gals join us. I think this is about our 10th. I'm with my co-host, Jake Miller, and also my business partner and junior associate, Pierce York. Jake and Pierce, how are we doing today, gentlemen?
Doing really well. How am I sounding today with my mic?
Ooh, you're sounding even better now. Nice and crisp, and your hair is all-time 10 out of 10, most interesting man in the world. Pierce, how you doing, brother?
I'm good. How are you guys?
I'm doing well. Good to see you last weekend, sir, in the Manhattan Beach, Newport Beach. Pierce will talk about some takeaways from that conference that we just attended. But I want to welcome everyone here. I want to welcome Kelly. I want to welcome Rebecca. Let's see on the rest of the list here. I want to welcome Pete, Nick, Fireflies.ai. That's a cool name. And and we're excited to talk about all things exiting highly appreciated cryptocurrency, businesses, real estate. Because here at Capital Gains Tax Solutions, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to exit highly appreciated assets. Defer millions of dollars of capital gains tax so you can create and preserve more wealth to help your clients do the same. For those who don't know me, my name is Brett Swarts, and I'm the founder of Capital Gains Tax Solutions. And that video you just watched, by the way, I want to touch on that was about, that's about 4 or 5 months ago, 6 months ago. So I was in New York for a trip with my wife, meeting with some strategic alliances, Ashcroft Capital, who I'll be speaking at the conference here in about 3 weeks, talking about this exact subject. That actual deal has closed, okay? It's gone on to close, and I want to make this as the case study of what's actually possible, because we have now seen when the account hit 50, or BTC hit 54,000, we saw it go to 68,000, and now it's down to, I don't know what it is today, but I think it was 36,000 this week, which is huge drop in cryptocurrency values. And so I want to walk through that. But why we're here is to try to unlock and demystify this deferred sales trust, so you never have to feel trapped by not exiting when you want to exit, when you think it's right, and that capital gains tax. Okay, and that's really what it's key here. Jake, what's a qualifying transaction so people know who this is for?
So they say that a lot of really big strategies are from millionaires. So we like a transaction that's at least $1 million. And I say that somewhat jovially, but at the same time, there needs to be a big enough tax pain for it to make sense. And, $1 million transaction, if the basis is very low, and there isn't other things that would otherwise offset the tax ramification, that would be an eligible transaction. So essentially $1 million, and you're looking at paying 100, 200,000 or more in taxes. That's the type of bar that we like to get over in order to say that this could be a home run.
Now, what if you have like 30 coins that are kind of mixed that equal about $1 million, $2 million? Is there a way to still use the DST, or does it have to be a single coin?
So that's a great question. It comes up all the time, whether it's coins, whether it's real estate, what have you. Essentially, the overall ramification of the taxable event you're going to have, whether it's one coin or several coins. Again, is the tax pain going to be sufficient that you would love to reinvest the gross asset minus the gross assets minus attorney fees rather than minus taxes? Then the DST could be a great fit. And again, one coin or many coins, if you're planning on selling them or selling out of your long-term positions, we can probably make this work for you.
Excellent. Pierce, does this thing work for like high-end luxury real estate, primary homes? Can it save a failed 1031 exchange businesses? Tell us about that.
I feel like this thing works for everything. Highly appreciated if you hit those thresholds. Yeah, it works for primary homes. It works for commercial real estate. It works for crypto businesses. In fact, I'm going actually to do man on the street today in Redlands. I'm going to do a case study on the listing that we got. So we can talk a little bit more about that deal a little bit later on if you want to dive into it.
I do. By the way, for those who don't know who Man on the Street is, I'm sharing my video right here. This is actually Pierce. If it's probably hard to see, I don't know if it's going to focus. And we're in Manhattan Beach right there, and we're working with another strategic alliance of ours, Piper Moretti, who is selling a $5 million listing for her clients. And she's known for many years. These folks, and Pierce and I met with them. I think they were there for 40 years, and they have over $1 million. I think it's $1.2 million or $1.3 million in tax liability above and beyond their exclusion. So look for this to drop on YouTube. But the whole idea was Pierce also taking this Man on the Street, where he's going to make videos of people that are listing properties with other agents that are not providing this service, where they're going to exit and pay $1 million of tax, and basically like interview people, like, hey, what would it mean if you could exit your property and literally sell and have an extra million to live off of, to invest in cryptocurrency or businesses or real estate or just securities, and and pass that wealth down to multiple generations, what would that mean to you? And so this is actually, Pierce is the cameraman. He did a great job. Now he's going to be on the other side of the camera. So Pierce, we're looking forward to you reporting back on what that looks like. But that's also an idea for Rebecca Munson, who's also a part of our luxury high-end Truckee Tahoe area strategic alliance. Rebecca, what are you seeing up there? And what do you think about Woman on the Street? What do you think about that?
Oh, that sounds like a great idea. I'm in the process of expanding my marketing, so I love that idea. I'll have to check in with Pierce or check it out on YouTube and get some great ideas. But real estate is still going great. We definitely have multi-million-dollar properties, and I know that there are people out there that are in that situation that are feeling the pain of having to pay significant capital gains for the sale of, their primary residence, their investment property, their second home in the Truckee Tahoe area. Yeah.
And how about for the one that you guys are building? Your husband and you guys build these big homes and sell them, have big tax. How's that going? I know the windows came in, right? Where are you at in that construction process, and
Sure.
what's the ETA?
Great question. So the windows came in. The house is actually buttoned up, and we got our framing inspection. So we're getting ready for sheetrock, and we're about a little less than 6 months away. We're hoping for June, but probably July is the most realistic time frame. So yeah, we're excited.
Fantastic. You think values are going to hold up given this inflationary environment and where interest rates are at?
I think values are definitely going to hold up, especially in our area. We have such a low inventory, especially of new construction, but just low inventory flat out, and a ton of buyers. So until we see a decrease in the number of buyers out there, I don't see anything changing as far as price points in our area.
Fantastic. Thank you so much for sharing, Rebecca. I'm also going now to go to the what I call the deal close story of the week. And although this one didn't close this week, I did get the permission to share more and more of this client's experience. He's been with us for a while now, and one of his goals and visions was to sell and exit the business that he sold in Alabama. You might have heard me touch upon it before, and be able to build real estate. So Rebecca builds with her husband properties and sells them, and he's also doing the same thing. The difference here is Rebecca in the past and her husband have sold assets and paid a bunch of tax, right? And then afterwards built the property and did that again, and all of a sudden you're like, oh my gosh, we could have not done that. Like, we didn't have to use a 1031. We could have been using the money tax deferred to build. And that's exactly what Mr. Shea Pope is his name, by the way. He's coming on next week. I want to drop that on Wednesday. We'll be live on YouTube, Facebook, sharing his entire story and his experience with the Deferred Sales Trust. I'm also going to try to invite him to the mastermind next week as well, so we can do that. But this is his website. It's called the Gray Spray Group, and he and his partner Adam. This is a drone shop out of Tennessee, where all of California is moving to right now. And it's outside of Nashville by about 40 minutes in a place called Clarksville, okay? And so their whole focus and philosophy is owner-operated full-service real estate development construction company. So one of the partners, Adam, he's the construction expert, and then Shay is the business entrepreneurial and the capital kind of behind it. And so he used the Deferred Sales Trust upon the sale of his business, $2.6 million business, which, remember, does not qualify for a 1031 because it's a business, to defer about $600,000 or so in tax liability. And then he partnered with the trust to build this property. Okay. And so there's the picture of these guys here. So Adam Birdwell and then Shay Pope. This is some pictures as well. And so it's 72 multifamily units. And so they're in the process of exiting them right now. So that drone shot before was just showing you the site, but now they're actually, let me see if I can, here we go. These are the units that are going up. And so they're doing them in stages. And the neat part about the trust is you don't have to put it all in at once. Like, you can use it as the funding is needed. And so we've had a lot of the funds in passive hard money lending paying about a 6% simple interest until they needed some funds, and they released another 200,000 funds to the LLC that's with him, and then release another $200,000 funds as it's with them. So as he needs it, right? So it's not any dead money that's sitting around, but that's where they're at. So it's a beautiful project. It's 72 units. I'm going to pause there, see if Jake Miller has any nuggets he wants to pull out of that.
Again, this goes back to the question you asked earlier about the crypto, whether it has to be done all at once or can it be many different transactions. You and I, Brett, we looked at a client in Idaho that had 15 homes that were smaller transactions. And of course, there's a few extra fees for the attorneys helping out with so many different transactions, right? But, there's more than one way to skin the cat, so to speak. There's a lot of different ways to help clients out in their situation. Every client situation is different. This is not a cookie cutter process. There are things that have to be done according to the law and according to everything else. We rely on Campbell Law Firm for all of that. However, in regards to helping the clients do what's best for them, that's where Brett and I come in to help them understand, first and foremost, are they eligible? Do they have one or multiple properties that make it a good fit, a home run experience? And then just because they're into the trust now, I guess, as a golden nugget, there's more to do as time goes on. And so there is a role that we play to help and assist clients moving forward into the future. And that largely depends on their reinvestment desires and how they would like to continue to grow their portfolio or their assets, whether that's inside or outside of the trust.
Perfect. So now I'm going to share my screen now too, and we're going to do the Monday morning quarterback, right? And I know this can be painful, especially in the crypto world. We're all like, oh, I wish I would have bought Bitcoin 10 years ago, right? Or I wish I would have bought Ethereum when I heard about it, or this coin or this thing. I would have put more into it, right? I want to play that game a little bit here, right? So keep an open mind here, but with the Deferred Sales Trust as the tool to be able to unlock these things. And I'm actually going to apply it to a real deal that we did and what could have been, right? And so this is Bitcoin. We're looking at it. This is the last 3 months. Okay, just the last 3 months. I didn't realize it was just so short ago. Basically, it looks like the high was approximately 1110. Okay, 68,000, almost 69,000. Okay, let me also back up a little bit more. Let me go 1 year. So Jake and I's client, she for those who don't know this story, she bought Bitcoin. She's working at one of the big Silicon Valley companies that you know very well. And she bought about $50,000 in Bitcoin. She only bought quick Bitcoin. She doesn't buy anything else. She's kicking herself that she didn't buy Ethereum at a certain point when she had the opportunity at a very low point. But that 50,000 or so went to $50 million. Okay. So she had about a 49 and change, gain, right? 49.99 in gain. And so her challenge was she never wanted to sell, partly because she believed in the long-term future of Bitcoin, right? Which is, but other part of it, she didn't really have a great exit place to land. And so until she sat down and had a brainstorming session with her college roommate, who also is in the tech industry, who wanted to start a tech company. Okay, so all that being said, they basically settled on a deal where $5 million of capital would go in from the sale of her Bitcoin. However, she needed to defer the tax. She didn't want to pay about the $1.8 million of tax. Lives in California. So the goal was to sell when the number hit a certain price. And at the time we were talking, it was right in this 40, this range, this 43 to 40, and it took a little while. And basically they settled at 54,000 as the exit. Okay. And so about 54,000 right around here is when the deal actually closed. They exited out of the assets and they deferred all the tax, and there was still 45 million. And like most people, they're meeting us for the first time. They're going, I'm not going to put all 50 million with you guys right away, right? We'll start with a smaller amount and then we'll work our way up. But I do know at 5 million, I want to go right away, and another 1.3 million after that on the new year. And so, but the Bitcoin has to be at a certain price. So they didn't know it would jump. When we were talking here, it jumped pretty quick to that 54, but then they exited it. Okay. Now about a month goes by and all of a sudden it's up to like 60, 68, right? Almost 69. And that was that was a big swing. Now they weren't ready to exit there. They were going to hold, but guess what's happened since then, right? It's dropped all the way to 36, 37 now, right? And so part of what you can do, I want to make sure everyone's aware of this, is let's say hypothetically the Monday morning quarterback. What do? Right? You exit at 60, 69, 68,000, right? All of it. So the other 45 million, by the way, that at 54,000 was probably at 60 million now at this point. So her 60, she could have exited into the Deferred Sales Trust, put it literally just cash in the bank. Okay, cash in the bank, waited until the market tanked, right? Partnered with the trust and bought back the coin at 36,000, all tax deferred. Okay, so what I showed you with the Shea Pope deal in Alabama with the apartments, and what Rebecca can do once her and her husband sell their house and defer the tax, is the funds can partner with you to go buy that next deal or go into that next investment, such as cryptocurrency. Okay, and then what's the goal? Well, the goal is to ride it all the way back up, right? So if you look at these highs, and Jake is probably smarter at explaining these charts, right? You know, you got 55,218, you got 61,312.21, you've got a high of about 63,413, but then look what it did again. It dropped all the way to 30,000 in July, and then it works its way all the way back up. So the point is, you look at some of these exit points, and each time you could be buying in and out of crypto tax deferred. Jake, any thoughts on these charts or what I'm showing here?
You know, I think the chart serves as a great visual purpose between the peaks and the troughs of the movement of anything, literally. And I mean, in no way are we encouraging people to be, you know, day traders or anything like that in regards to crypto, but the possibility of what we're trying to show is often reflected in any asset, whether it be real estate, whether it be crypto, whether it be stocks in the market, that the power that we're giving you with the Deferred Sales Trust allows you to sell when things are high. It allows you the timing and control over the timing to sell without incurring immediately those taxes, especially if you're going to redeploy those assets, as Brett is explaining, and take advantage of when the market is low. Again, when the real estate market is low, or until you find that next really good investment, or until Bitcoin or crypto of any other type of coin is low, this gives you the power and the control over being able to deploy the assets the assets or the funds into the asset of your choice, and the ability to diversify across all asset classes into what accomplishes your goals.
Excellent. Now we're going to open up for questions. In fact, we have one here. It looks like from Pete. Thanks, Pete, for the question. Let me just click on the chat to pull it up. And it says, half of my crypto is taxable. How does it get sold? 1 second here. As my computer kind of loads. How does it get sold into DST, and how does that become? Okay, here we go. Sorry, half of my crypto is taxable. How does it get sold and into the Deferred Sales Trust, and how does that become tax deferred? Jake, do you want to take that question?
I'd love to roll with that. This is the fun and exciting part of what we do. Yeah. And essentially, we're creating another entity. There's a trust, and this trust has its own ID and everything else, and it is recognized by the IRS as someone different than you. And so what we do is we take this trust and we put it between you and whoever you're going to sell to. So you are the seller and there's a buyer. And usually between the buyer and the seller, there's a transaction that is taxable. When we put the trust in between the two of you, that's the magic, essentially, where we transfer the asset that you're going to sell to the trust. You receive a promissory note, which is wonderful. You've changed from being the asset holder to a creditor on the asset. The trust then in turn and simultaneously sells that asset to the buyer. The buyer transfers the money into the trust. You don't receive the money into your social or into any type of entity that you have considered beneficial ownership of. And that helps you not receive what's called contractual receipt, which per the IRS would then make it taxable. Because you don't receive contractual receipt and the funds are in the trust, that's the secret sauce, so to speak. I mean, there's more that goes into it and everything else. And that's what we trust in, Todd Campbell and his law firm in order to make sure that everything's really good for the IRS. However, from us and from the mechanical aspect of how we operate, now the trust has all these assets, and the trust can redeploy those assets into other investments or enter into contractual relationships in a joint venture to then reinvest your funds and help grow those assets over time.
Pete, does that make sense? Any questions there? And feel free to unmute yourself as well, and we can kind of chat through this.
Yeah, that makes sense.
Yeah. And where are you calling from, Pete?
Denver.
All right, we'll be in Denver in 1 month at the Best Ever Real Estate
Yeah,
Conference.
that's right. Well, I have 2 feet of snow outside my driveway.
Well, maybe it'll melt in time, but yeah, no, you're invited to that too. Anyone else who's listening to that, it's going to be pretty cool. I'm actually going to be speaking on basically exiting crypto into apartment complexes, right? That's basically the whole talk, and how to diversify, how to get cash flow, how to get depreciation, and how to not have to ride such high highs and low lows in the crypto, but take dollar cost average out to make sense of it. Hey, Jake, that was a really great explanation. Could you also touch on how this is an unfamiliar territory for the IRS when it comes to tax deferrals, such as IRAs or 401ks, right? Instead of, let's say, us paying taxes on something, can't we use like an IRA as the vehicle, or IRC 401k, right, as the vehicle to defer tax?
Yeah, and I think you're bringing up this point, Brett, because a lot of times clients say, "Hey, this is too good to be true, and this doesn't exist, and I've never seen this before." But in reality, this happens all the time and every single day, and this isn't something that's going to draw, undue attention or anything of that nature, because it follows a lot of the same code or a lot of the same paths that other strategies out there that you are more familiar with do every single day. And you named a couple of those, Brett. And so whether you have an IRA, whether you have, a 401k, or actually there's several other types of vehicles out there that are deferral in nature and allow for transactions internally that are not taxable to you until you take a distribution. And essentially this is very similar, except it is not a qualified retirement plan. So there's a plus and a bonus. There's no 10% early withdrawal penalty. There's no contribution limitations, and there's no required minimum distributions. I mean, there's so many positives and benefits that allow you, again, the flexibility of control over the time of when to take that distribution personally rather than reinvest it for business purpose. And it just truly becomes a phenomenal financial tool that you can exercise and deploy when appropriate.
Very well said. I also want to add too, some of those other ones don't deal with the state tax. So if you're listening to this and you're a crypto ultra millionaire, I did a video on this, $100 million Bitcoin sale, right? What do? If you have that amount of capital, you're no longer dealing just with capital gains tax and deferral. You're actually in the estate tax, death tax. And you probably know this if you have that much equity at this point. But I want to let you know the Deferred Sales Trust is a really elegant solution in that upon exit into the Deferred Sales Trust, we can move all of that outside your taxable estate, which takes care of the estate tax, 40% death tax. I call it the dragon. It wants to just eat up all of your wealth. And that has nothing to do with stepped up basis, or all of your wealth, 40% of your wealth. That's above the exclusions, which are 22 million married, about approximately 12 million single. It wants to eat that up, whatever's inside your taxable estate. So the old way of doing things would be say, hey, let me buy a bunch of life insurance, maybe do some gifting, some planning to my kids, maybe give it all the way to charity, right? Which are all we call blockbuster strategies, and could be your number one strategy too if you're super charitable. That's great. But guess what? The Deferred Sales Trust, you don't have to do any of those things. You can move it all outside your taxable estate, and you can do it in one day. Okay, and you don't have to have any kids, right? Although you could pass it on to other relatives and such. And then eliminates the 40% death tax. And so, whereas the other retirement type of accounts, right, or even owning real estate and just continue to do the 1031 exchanges and getting what's called the stepped up basis, that's great for capital gains tax, but it doesn't solve the estate tax challenges. I want to open it up for a couple new folks too. I want to encourage you to let us know where you're from and what questions you might have. We see Bella. We also have a few others. We have Jim. We have Jim's iPhone. We have Bella. We have Nick, Kelly. And Kelly, we just met. Kelly, actually, we just met at the IIRC real estate conference with Pierce and I. And Kelly has I'm looking forward to actually having her share a little bit about her crypto knowledge. Kelly, are you available to chat a little bit here?
Yes, I am.
Awesome. Kelly, tell us about where you're from and a little bit of your story and your focus in crypto right now.
Yes. My name's Kelly McTaggart. I'm a photographer, so I do not have a financial background. though I was privileged enough to photograph the event in Manhattan Beach where I met Brett. And I love being on here. I appreciate the invitation because it opens up new knowledge to me and a subject. I mean, all of this is so new to me, so I feel like a sponge right now, and I love it. We connected because I'm invested in a crypto that I'm not pushing investment for whatsoever. In fact, I'm more talking about the security side of it, because I think we so often think of like NFTs and coins going to the moon and all of that, but there's this whole other side to the blockchain technology that crypto offers. And there's a token that just back in November of 21 was legally recognized as the first decentralized LLC in the world. This is brand new legislation. This is a brand new thing. And what brought it on my radar is that it's the first token I ever heard of like landing government contracts and government partnerships. So for example, BizSecure, who takes care of all of the cybersecurity for the Air Force, will now be putting flight records on blockchain. Then from there, learning about the token where it kind of ties into the financial aspect is the token did a partnership with Revest Finance, where they take exactly what Brett was talking about, a trust, but what they're doing is they're tokenizing their money. The money's getting, or I'm hopeful. Sometimes I mess up the terminology, but essentially they're tokenizing all the liquidity. So what you can do is put it in a decentralized coin, put the contracts on like Ethereum, have full transparency, but also you can attach, just like any trust, upon verification that this thing that was agreed upon is executed, it's just autonomously will release funds, and having the liquidity up front takes the risk out of bankruptcies or contracts going wrong, etc. I feel like I've taken up a lot of space, but I try to pack it all in there.
No, it's so good. I mean, as I've never heard a photographer speak so eloquently and so precisely on crypto. So I think that's amazing, Kelly. And you're more than a photographer, and you have a lot to offer. So I'm excited that you're here. And that's what we're trying to create as a community, where we bring in the best ideas, different ideas, new ideas, and then try to distill it to how do we create and preserve more wealth, exiting well into real estate, crypto, businesses, right? And helping others do the same. And at the center of that is the Deferred Sales Trust is that tool. But as we quickly, and hopefully you guys are catching on what we're trying to build here, it's us as a team together. It's not any one superstar, right? Kelly's knowledge on that piece could change things for what we're doing here, and Jake's piece and Pete's questions and what Pierce is doing on high-end primary homes and luxury real estate, and what Rebecca's doing, and creating this community where we can share and mastermind and we can make these things simple. So Kelly, I super appreciate that. Awesome. Jake, any thoughts on any of that?
It's exciting that the more that we learn and the more that we get clarity in regards to crypto and a lot of the things that are new or nuance, other countries that are, accepting crypto as a currency, where here in the US it's an asset and everything else. It oftentimes reiterates the process that we have with the Deferred Sales Trust, that it's not something that is new. That even though the assets that we're utilizing and everything else that we're working with, we can feel comfortable that because the Deferred Sales Trust has been around for so long, and that there's been thousands upon thousands of trusts out there, that the IRS has taken a look at it, and they've taken a deep dive into it, and that it has a 100% track record, we can feel comfortable with what we have as a process and a strategy, which is not something that, is changing, so to speak.
Very well said, Jake. That's a great point, right? That you want to make sure that whatever tax deferral strategy from anyone you're listening to has a long track record, that it's been tested through the fire of audits with the IRS, right? That it's actually succeeded, not only those audits, but also the people behind it, the tax attorney, like that Jake referred to, Todd, and the professionals that are actually doing the legal work and have their clients, and they stand behind it, right? And they've actually been successful in the audits with those folks, right? And they have lifetime audit defense, which is one thing that you get here with capital gains tax solutions in the deferred sales trust. For any deal, there's lifetime audit defense. And by the way, if you're learning about this for the first time, we don't also charge anything unless and if the deal actually closes. So we do all the work, all the consultation, all the setup of the trust, everything. And if for some reason Bitcoin goes from 68,000 to 35,000, you don't owe us anything if you didn't exit the asset into the trust, right? Or decide not to use the trust. So we take all of that pressure off. A lot of attorneys will charge $250 to $500 an hour just to talk about these types of strategies and dive into these situations, but we don't. We want to take all that pressure off. We're very transparent with that. And that's part of one of the values we have. So I'm going to open it up for Bella, and it looks like Sonia is joining us for the first time too. Hi, Sonia. Where are you two from? If you wouldn't mind, either put in the chat if you're shy, or if you want to just say hi, unmute, and talk about where you're coming from, a little about your story. Why don't Sonia, you go first?
Hi. Yes, I ran into somebody who introduced me to you yesterday. And so I'm like, absolutely, I want to jump on board and figure this out because I'm a real estate agent. I'm a realtor here in Thousand Oaks, California, and Ventura County. And we've got a lot of luxury properties here. And, with all the competition out there, I want to find solutions for my clients. And we're talking, $2 million plus up to $20 million homes up here. So, there's a lot of concerns. And if I have a way to be resourceful and, find a way for my clients to do business and, fight this capital gains thing, then I need to learn about it. So that's why I'm here today. And I'm very intrigued of what I'm listening to.
Amazing, Sonia. By the way, I'm curious. You're just jumping in for the first time. Who told you about me or us? And then second, if you're walking into a listing presentation right now, what would you need to know from us to feel 100% confident that this could be the right solution for your clients?
Well, Jim Kohler introduced me. I don't know.
I'm actually on right here.
There you are. Hi, Jim. And so,
doing?
yes, so I'm here today. And so he talked about it. We always talk about different things. And so if I was going into a listing presentation right now, definitely I'd need to know all the ins and outs. I need to be educated on this program so I can talk, and educate my clients. But what is the cost for this? And then obviously, you have a lot of expertise here and you're available. So I need all your contact information. and do you have any kind of presentation on this, a slide presentation or something that I can incorporate in my presentation?
Sure, absolutely. So thank you so much and welcome. And Jim, thank you so much for having, and Jim, I remember you from last week, right? I think you were here 2 weeks ago.
Absolutely. And I've got a little story to share with you all too.
Yeah, please.
You chat with Sonia. I don't know if you wanted to answer Sonia's question first, but why don't you go ahead? And then
I'll answer your questions first, by the way. And so we'll talk about fees first, and then I'll give you some actual deal close stories and a marketing piece that can also help you as well. So fees, generally speaking, Sonia, we'll keep it real simple. Let's imagine it's $1 million sales price, okay? $1 million sales price, or $1 million of crypto, or $1 million business. The gross sales price. The tax attorney takes a one-time fee of 1.5%. So it'd be $15,000. It'd be paid at closing. Although if somebody pays it prior to or after closing via a check, personal check, can be tax deductible, or it can just come out of the proceeds. Okay, so that's one time. That covers lifetime audit defense. Okay, gone forever. Jake and I were about 1.85% to 2% on a recurring basis, with some of it charged up front on the net proceeds. Okay, so let's say it was a $3 million sale, but they had $1.5 million of debt and closing costs or whatever, all that stuff, and there's 1.5 that hits the account, we would charge about 1.85 to 2% of that amount, right? So if it, or even easier, if it was like $1 million net proceeds, then it would be about $20,000 a year, and that's why we have that minimum requirement of a $1 million net proceeds, $1 million gain, because we need to have a big enough pain. Jake says 100. I'm more like 200, 250 to 300. That's what I like. That's kind of painful. That's how do we determine that number? Well, that gain is pretty simple, right? It's what they bought it for plus any improvements minus depreciation. Okay. Let's take a primary home we just did in Palo Alto. Okay. A luxury primary home. By the way, for the number one of the top Keller Williams realtors in the history of Palo Alto, probably ever. Okay, he's amazing, and it's for his own house. And he heard about this thing like 3 years ago and was like, "This is the guy who presented it. I don't think did a great job. This is crazy. I'm not even going to touch it." And then he got introduced to myself and my team, and we went through it for a whole year of due diligence. Long story short, he sold at 8.3 million. Okay, and above his 121 exclusion, right? If you lived there 2 of the last 5 years, it's 250 if you're single, 500 if you're married. It's tax free. It's one of the best, coolest things that the government gives us, right? So above and beyond that, he owed about $800 to $1 million of tax. Okay, so it's like, gosh, he's like either A, not going to sell, B, the realtor was not going to get paid, right? The title isn't going to get paid, lender wasn't going to get paid, and he's going to feel trapped in his house. And so the Deferred Sales Trust enters the scene, which, by the way, was really kind of his only solution, because remember, 1031 exchanges don't work for the primary home, right? Or he could give it all the way to charity, but he needs the money for retirement for his own family. He has 5 kids, and so he's like, man, this is big for me. This is part of my retirement. So we were able to exit that property into the trust. We worked with Old Republic Title Company. They were very skeptical and cautious and weren't sure, and oh my gosh, like they had never seen it before. Although we work very closely with Orange Coast Title, right? Especially if you're in California. But we worked with a lot of the major ones. As long as you prep them and don't throw it on them last minute, they're fine, right? They're good for the most part, depending on their experience with us. Okay. So the cost again, about 1.5 on one-time setup fee, and then about 1.85 to 2% on a recurring fee. And so I think that was the first part of your question, Sonia. You may have had does that make sense so far? Any questions there?
No, I'm kind of grasping it. So I am familiar a little bit about how that works. But I'm still connecting the dots, so I'm still learning. I'm reading your materials.
Yeah, take your time on that. I'm going to share my screen now too. And this is we made this for California. This is our California Capital Gains Tax Solutions closed deal stories. And this is actually a picture for a client of ours who sold a $7.9 million property near Santa Cruz. All right, this was what they looked out at. And in fact, they grew up in the property. They've owned it for, about 30 years. And they bought it for like $980,000. And then all the family grew up, moved out. Kids all went and got their jobs, and they made it an Airbnb rental. Okay. And so that's what's looking out the back door. And so they had zero basis because they had fully depreciated, and they had about a $2.6 to $3 million tax liability. And she was not going to sell. And she's in her 70s. And she's like, I don't need more problems right now. I have plenty of wealth. I just want to exit and get tax deferred. They put 100% into the stock market. Her son's a financial advisor. He didn't manage the money because that's something you can't do because it's too close for comfort. But he vetted this thing every which way you could think of. They're clients of mine. Here's another one in San Francisco. They actually lived in a duplex, lived in one side, and they rented the other side out. So they got part of that 121 exclusion. This is the one on the left. The one on the right it's a regular house like in San Diego that went way up. And as you go down, this is actually the Palo Alto one I was telling you about right here. That sold. A beautiful property. It's like we had a big old party back here to try to get more people to come and buy the property. This is kind of during the pandemic. It was tough, but beautiful property. Here's the one in Aptos near Santa Cruz. Here's one that we just did in Cupertino near Apple headquarters. Just looks like a standard house, but it sold for 2.3, and she deferred about $350,000 of tax. Here's one in Menlo Park. And so if you email me, Sonia, Brett at capitalgainstaxsolutions.com, I'll give you this piece here, right? So you can share it. Here's one in LA. Here's one in Sacramento. And it goes on and on. It just keeps going. So we're here to make this thing very real. My background, for those who don't know, I started at Marcus & Millichap. I'm a California real estate broker. I'm a multifamily broker with eXp Commercial, and I train and coach everyone on how to do this now. And then I also represent my clients here locally if they're looking to sell and use the Deferred Sales Trust to exit. And so, but my story is I found out at Marcus & Millichap in about 2008 and 2009 after everything had crashed. And clients were very, were scrambling. Some of them had lost half their wealth. Some of them were getting foreclosed on over the next 3 years. And we identified that the 1031 exchange was the primary reason. And they had too much debt as well. And part of that is they were overpaying and chasing properties in 04, 05, 06. Then the music stopped. You couple that with the fact that a lot of baby boomers, they're wanting to relocate out of California into other states, and their asset that they're living in literally is their retirement plan. They're either doing reverse mortgages, or they don't have cash flow and they feel stuck in this house because of the tax. So when you connect these dots to say, what are you trying to solve? Well, I'd like to have cash flow. Okay. I like to be diversified. Okay. I like to not have a lot of property management. Then we can exit the property, make it cash flowing for them. Quick side though, you can't use this for a primary home. So if they're exiting, you can like for the property in Palo Alto, he took a big chunk in order to buy a primary home, but the rest of it was in the deferred sales trust. So if you want to keep it tax deferred, the government says fine if you use the deferred sales trust as long as it's in businesses and investments. If you want to use it for your primary home, just take that amount and then use it as your down payment. So I just want to let you know, Sonny, about that. But overall, we're here to solve problems and help your clients, get a whole better outcome. So Jake, you want to add anything to that?
No, I think it's important that people know your experience, Brett, because again, there's the strategy and the strategy speaks for itself, but there's also the people behind you helping you with the strategy. And your incredible experience in real estate and in investments in general is very beneficial. And of course, that's what we all bring here to the table so that we can share with everyone else. And very collaborative in nature. And let me explain, because I've had a phenomenal experience to coach CPA firm owners across the country on various strategies, including the Deferred Sales Trust. And it's been a fantastic experience. But from a personality perspective, I'll tell you that some people are not as collaborative as others. And one thing about you, Brett, and this team and what we have going on here with Capital Gains Tax Solutions is that we are absolutely sharing in a very collaborative manner what we know. And I want to say that we have evolved over the last year and a half or so with crypto, as crypto has evolved. And we try to stay on the forefront of everything that's coming so that we can be more helpful to our clients. And we've actually learned quite a bit because of our clients and their experiences. And sometimes we put people in touch, we connect them, or we learn from them what will help others. And we try to share that. Because at the end of the day, I mean, there's always your do-it-yourselfers out there and everything else. But at the end of the day, we're trying to bring the level of expertise that we're gaining. We bring it to the table and we share it so that the client's overall experience is the best possible experience that they can have.
Thanks, Jake. Appreciate the compliment. And I want to throw it back to Jim. Jim had a couple thoughts or questions, Jim?
Yeah, I appreciate it. And I really wanted to say a big thank you to both you, Brett, and Jake, for taking the time, the money, and the resources it takes to put these on and to teach all of us, not only tax professionals, but investors like ourselves. Because I'll be honest with you, in most cases, it would seem that for all of us, it's going to include probably a significant financial event, probably the biggest one in our lives. And then when we want to turn that over to a model we're just learning about, it sounds phenomenal. And then I think with each one of these calls, it benefits me and gives me a lot more confidence. The reason I brought up to Sonia was because her husband is a successful business owner, and she's got a long list of buyers. But then there's a lot of people, like you had mentioned before in a previous call, that they just don't want to move out of their house because they don't want to get hit with that capital gain issue. And so I thought this would be a pretty nice tool for her to use. And I'm glad she was able to jump on. She's also with EXP, I believe, as well. So
awesome. Love that.
Yeah, absolutely. So I remember that from some of the other previous calls. But the one story I wanted to share with the people on the call is just to build more confidence, because this helps me each time. But I was with a buddy of mine who we both have sons on the same baseball team. He had sold his insurance company back in 2019. There were three partners. They sold it for $25 million. And I said, well, there's this interesting tool called a deferred sales trust. He goes, oh, I set one up. So he set one up in 2019. I said, how the hell did you hear about it? And he said his other partner's dad had set one up 15 years ago and has had no issues with it. The individual that set that up had a 20-year career in the IRS, went on his own, and has been, working with large corporations, large high net worth individuals on setting up these deferred sales trusts without an issue. And so that to me was, it spoke volumes and it built even more confidence. I love hearing the stories. I love hearing the case studies, but to actually sit there and basically, conversate back and forth with an individual that you know and you trust and who's going through the process and hasn't had any issues. The fact that the build on that is that this acquisition takes place in 2 stages. He's got another chunk of money coming in for the second part of the acquisition. And he said to himself, he goes, well, look, I'm going to have to move out of California now. And he talked to the individual who set the trust up. He said, why? You don't have to. It's in the trust. It's part of the trust. You're fine. And that speaks to a level of frustration I have, born and raised in this state. I don't want to leave California, but California is leaving me. And that's the problem. And now when they're pushing towards this single payer system, potentially doubling the taxes here in California, this might be the one tool that can actually keep a lot of us here if we take advantage of it. And so there's an event, I'm in the public private stock realm, and that's why I'm looking forward to this. But I just wanted to share that with everybody because, that's an actual story that I heard from somebody I trust. And so it just builds on the story that both you and Jake have been telling for quite a while.
Jim, thank you so much for sharing that. That means the world to us because that is exactly what I call it, becoming believers, right? At first you're like a skeptic or like that's crazy, I'm going to dismiss it. Or then you're like, oh, I'm skeptical, but I'm open. And then you're like, maybe this can work for me. Maybe this can work for my clients to like, oh my gosh, the transformation is through the roof. This is the Netflix versus Blockbuster, right? This is Amazon versus Circuit City, right? This is EXP versus all the traditional brokerage models. Like you see that because it transforms all the things you're talking about, right? And same thing, I'm a native Californian, right? My dad talked about, we grew up in the business of real estate construction development in the Bay Area, Silicon Valley, 1980s hammer pants days with Steve Jobs, his brand new Apple computer, all of that stuff. And literally what's happened now is sad. In the last 30 years, the leaders have, a lot of ways, put the state down. Let's just put it that. Just pulled the state down. Right. And my dad says, I wouldn't start a business today in California compared to what I had before. Like the stuff I had, it used to be so easy to build houses, Brett, and to get things done and permits and on and on and on and on. And you're right. A lot of us, Jim, want to be here because we love California, but taxes and the attack on wealth is real, right? And so how do we bridge those gaps? Well, this is the cool thing about the trust. And what Jim is referring to, by the way, is why doesn't his friend have to move to California? Well, because once the funds go into the trust, the funds they don't necessarily have to pay you right away, right? You can delay the interest payments, okay? So Jake Miller mentioned there's no required minimum distribution for compared to like an IRA, right? But with the deferred sales trust, we do want something coming out typically within the first few years or so, but it doesn't have to be the full amount. And the other amount can grow income tax deferred, right? So we did a deal in Colorado, for example. They actually live in California. They were $25 million, and they sold a $5 million multifamily property in Colorado, no basis, okay? Didn't want a 1031 for a lot of reasons, but also had huge estate tax challenges. All of it's inside the taxable estate. So one day they sold, exited, but they also exited the capital, the estate tax. It's gone forever. They're in California, and one of their issues was, we don't want to receive all of the income right away. Well, they're delaying the income for a few years, and then they'll start receiving income. But guess what? At that point, they might establish residency in Incline Village or Florida or Texas, right, or Tennessee, or a more tax-friendly state, maybe 51% of the time, right? And start to receive income off of the trust, which is taxed as ordinary income tax. You get a 1099, but you can still maintain those things. In fact, my wife and I are looking at moving potentially to Florida for 51% of the time, and then maintaining our place here in Sacramento for very similar reasons. But that's really helpful, Jim. Thank you so much. Jake, you want to touch on anything he said there?
No, I mean, again, that we talk a lot about people who are eligible, how to get in, but there's also a journey once you're in. And this can be a financial tool for a lifetime. We need to verify what the objectives are and what we're trying to accomplish and everything else. But this can be one of the financial tools that you end up utilizing a lot longer than others. With that being said, there's a number of other strategies that we can help you with in the future in conjunction with the Deferred Sales Trust to optimize your future scenario and your future tax situation. And Brett touched on one of those that are very critical, and where you domicile and everything else. So there's a lot of things that we can be helping you with as time goes on.
Can I ask one quick question, Brad? I'm sorry.
Yeah.
So one feature, and so the foundation, the structure of it sounds rock solid based on everything I heard from a buddy of mine. But one of the features he said of the trust was that not only can you invest in other assets within the trust, but there was an ability to take a loan from the trust and then pay it back. Is that a feature that you guys employ as well, or how does that work?
No, it's not. You got to be very careful there, right? So now you can partner with the trust to purchase investment real estate, which we say it's kind of like borrowing from yourself, but it's not borrowing from yourself, because when you borrow from yourself, it becomes a taxable event. And so you need to make sure that you're doing this properly. So like my client in Alabama who did the $2.6 million business sale, they partnered with the trust and are building the 70 multifamily units tax free. So it's not a loan. It's literally a JV partnership with the trust. Okay. So yeah, these are all the things that Jake Miller and I and the tax attorneys would guide you through step by step, so we don't step on a landmine. Now, he might have been, you can go into the lending business. So like, let's say you said, hey, I want to be a lender as a business, right? I want to lend out to different things, not to personal family members, not for like primary homes, but like become a lender. And in that scenario, you can partner with the trust and the funds can be lent to businesses. But you gotta be very careful that you don't use the borrowing against to do anything that is personal, but also even business, because it could be a constructive receipt challenge there, Jim.
That makes more sense, and I'd probably heard him or misheard what he said at that point. We're in the batting cages, so everything's like getting loud in there.
Yeah,
so,
yeah.
No, I appreciate that. So thanks, Brad.
Yeah, absolutely. So we have about 6 minutes left. Pete also asked a question here, and if you have more questions, you can put it in the chat, and you can also unmute yourself or raise your hand. He asked, well, what if it works for Puerto Rico, right? Can you go to Puerto Rico? And the answer is yes. So let's say you're in California, take my $25 million client who sold the $5 million into the DST and is going to get payments. If they establish residency in Puerto Rico, guess what? The residency is in Puerto Rico. When they start to receive that interest off of that trust, which is income, doesn't mean that the capital gains tax is not going to follow you, right? So that it's going to follow you no matter where you go. So it's not like you're getting out of that. However, most of our clients will keep the golden goose intact, which is the initial principal, and they'll let the golden goose is laying the golden egg, which is the interest. They'll never dip into the principal. They'll always just take the interest, the golden eggs that are being laid by the trust. So in his scenario, the $5 million is there. Typically, we're at $5 million at 8%. I don't have my calculator handy. And the amount's compounding for a few years. They move to Puerto Rico. They establish residency, and then they start to receive income from the trust. They're receiving it in the state in which they're in. So that's a favorable way, by the way, to make the deferred sales trust an investment rather than an expense, because it's not only capital gains tax deferral, it's income tax deferral, it's a state tax savings. And then the other way we really geek out is we go buy investment real estate, get a new depreciation schedule, do some cost segregation. Like, these are all the cool things. By the way, that's what I'll be speaking out at the Best Ever Conference in Colorado. I highly encourage you to get there. Some of the smartest people will be there. You can go to capitalgainstaxsolutions.com to register, and I have a discount code to save 15%. capitalgainstaxsolutions.com. Okay, so invest in Mexico rentals. Pete asked, can we invest in Mexico rentals? Yes, you can invest in Mexico rentals. So the trust can partner with you in an LLC and invest in other countries, right? We want to make sure that we're taking a reasonable amount of risk for a reasonable amount of return and not overextending the trust. So that's part of working with Jake Muller as the financial advisor, risk tolerance questionnaire, going through all of that. But you absolutely can invest in Mexico rentals. Let's see here. Yep, Pete, I think Jake just answered that. Any other questions from anybody else? Thoughts, concerns? We have Leah, we have Nick, we have Fireflies.
Again, just thank you for all of this, and I don't know how long you're going to keep repeating, the intro kind of information, but as long as you keep it coming, I just feel like I'm just growing and learning so much every week listening to you. This is my third week listening.
Awesome, Lindo. Keep coming back. Appreciate it, and keep diving in. Like anything, this can feel overwhelming, right? But if you just keep absorbing one new idea, one new component, one new fundamental of the Deferred Sales Trust, hopefully you'll become an expert in no time. I wish I would have had this back when I first learned about it in 2009, but I was just on cold calls and deals and watching the tax attorney put it all together. And but I'm trying to speed up this process for everybody. Okay, Bella. By the way, you haven't said hi yet. Do you want to say hi by any chance? If you unmute yourself, we can say hi there.
Good morning.
Good morning.
well, I don't know really where I'm speaking to, but good morning. I'm outside of Guadalajara in Mexico, and I've been living here for quite a long time, but 6 years, getting my citizenship, preparing to move to Costa Rica in about 2 weeks. And I'm also I inherited some land in California, and it's being sold. And so I was referred by Chip Stites, who did an article for International Living that caught my attention about investing in global exchange traded funds. And he recommended that I listen to your podcast. I'm very, very low tech, and I'm probably even lower in terms of an academic background in fiscal matters. So I appreciate so much being part of your group.
You're so welcome. And anything you need, Jake and I are happy to spend some time with you one-on-one to see if the DST could be a good fit. And California tax can be pretty high there. And then congratulations on getting to Costa Rica. Right? I heard it's not even easy to get in there, but also to get your citizenship there. And I said, Guadalajara, are you getting your citizenship there, or Mexico, or how does that work?
I'm getting my Mexican citizenship and using that as a jumping off point to Guatemalan citizenship, Panamanian, and Costa Rican, and maybe others. But I'm really looking for tax. I'm looking at taxes carefully. This property that really has me puzzled, Chip recommended you because I'll probably be getting about $4 million on this property, and I don't have any idea how to take care of myself. I'm learning about qualified opportunity zones and real estate investment trusts and other things, Delaware statutory trusts. I don't really know what they are. I'm learning as I go. So I'm a bit like Kelly, the sponge, and anything helps.
Well, very good, Bella. Thank you so much. And just so you know, too, happy to walk you through all of the nooks and crannies of each of those strategies: opportunity zones, shared winner trust, Delaware statutory trust, deferred sales trust, and give you a good, clear decision on those. We've closed all of those, Jake and I. And then second would just be timing. Just want to let you know, for anyone who's listening, you said the property is under contract or listed, or?
Yes, it has a buyer right now.
Okay. And for anyone who's wondering, like, when does this have to be set up? Now would be a good time, Bella, to engage with us at no cost, no obligation, so that we can put the language into the contract, into an addendum to give you that option to execute on this, right? And so the worst call we can have is someone like Bella, like, let's imagine it closed a week ago, and you're like, hey guys, I'm learning about this first time. I got this $4 million property that just closed. And we go, oh my gosh, Bella, we're so sorry. Your, let's say, $1.5 million or $2 million of tax is too late, right? And so this is why we work no cost, no obligation. And so if you're interested, you can just email me, Brett at capitalgainstaxsolutions.com, or we can just schedule a time where Jake and I can jump on and walk you through these scenarios. No risk, no obligation. We'll be friendly just like we are right here, right? But I just want to let you know that, because I don't want you to be like, oh, I wish someone would have told me. Does that make sense, Bella?
Yes, of course it does. Thank you so much. And it's capitalgainstaxsolutions.com.
Correct. And I'll put it in the chat right now. Yeah. And if you look it up on Google, it pops up. But it'd be my first name, Brett, BRETT, at capitalgainstaxsolutions.com. Brett at capitalgainstaxsolutions.com.
Very good. I will send you email. Thank you so much for that invitation.
You're so welcome. And it looks like Leah raised her hand. Leah, do you have a question there?
Yeah, just to Bella. Bella, thank you so much for chiming in. I have a lot of interest in looking into Mexico, investing in Costa Rica, and investing in South America. Can you say that the resource that you inquired about in the beginning when you started your search, can you say that location again?
Yes, happy to. Can you hear me?
Yeah, we can hear you. Go ahead, Bella.
Okay. It's a publication that Chip Stites wrote the article for, called International Living. And it talks about real estate, but it has a lot of information that applies to anyone who really is looking at an alternative to, I guess, to where they are. It is in English. It's not in Spanish. As far as investing in South America, Central America, Mexico, I own property in Mexico, and I am getting my citizenship in part because I cannot own property within 50 miles of an international border or 25 miles of the coast. And I'd like to own a home at the coast as well. I'd like to own a home at the coast.
So Bella, we can help you out with some of those other things, because that's actually a misconception from about 10 years ago when it was that way.
Okay.
And I have a temporary resident visa in Mexico. I also speak Spanish, so that helps me out quite a bit.
Ay, qué bueno.
Yes, cuando me conviene sale bien. But like a lot of these strategies and a lot of what you're talking about is something that more on a case-by-case scenario, things are quite a bit different. We can definitely help you out there. Brett and I also have a lot of contacts of opportunities, developers, where you could even get in early on and get an even better deal as you're reinvesting some of these dollars. So in various places in Mexico. And it's a shame that you're going to Costa Rica so soon. If you were there in Guadalajara another week, I would be there in Guadalajara too. But
oh, well, I'm not leaving until the 12th. So I will send email to Brett, and he can give me the details on where I might catch up with you. That would be great.
Very good.
I look forward to talking with you folks, and I just appreciate so much what you're bringing. It's baffling to me. And this is not the only property that I own in California that's going to be liquidated. So I really need to figure this out.
Well, thanks, Bella. Our pleasure, and we're here for you,
you.
right? And so we'll spend some time with you. Look forward to that email, and we'll set a time, you, me, and Jake. That being said, we're kind of at the top of the hour. I know if anyone else has any last questions, we're going to let people probably get to their meetings. Let Sonia go list that property. Let Rebecca go maybe be the woman on the street. I know Pierce is going to be doing that too, right? Kelly, thank you so much for showing up. Bring a friend next week, okay? Invite somebody, because we want to obviously help more people escape feeling trapped by capital gains tax. And go to capitalgainstaxsolutions.com. If you want to connect with Jake Miller directly as well, it's Jake at alphamarktax.com. That's Jake at alphamarktax.com. Or also Jake at strategictaxsolutions.com. Oh, it's a new one, Jake. What's going on? This is cool.
Yeah. So, I mean, just kind of to coincide and be a little bit more synergistic with everything that we're doing here, I'm getting enough traffic that I felt like, I've got a domain called Strategic Tax Solutions and some other things that direction. We should just kind of keep everything consistent here. And your capital gains, solutions. I'm Strategic Tax Solutions. I think that'll run better with what we have going on, right?
I think that's awesome. And by the way, people might be wondering, well, why aren't you all saying the capital gains tax solutions? Well, part of that is I'm the trustee and Jake Miller is the financial advisor. And then there's the tax attorney. We keep saying, hey, this Campbell tax firm, right? It's necessary that each of us are separate. Right. That's the integrity of the trust. It's kind of like the three branches of the government. Like, you got judicial, you got legislative, right? And you've got executive branch, right? So you have these three branches, same thing in the sense that you have a trustee, third party, unrelated. That's me. And then you have financial advisor, Jake Miller. They can't be one another. And then you have the tax attorney, he's separate. And this is actually a good thing because it's more accountability, right? It's more eyes and ears. It's more people looking over and making sure that we're doing everything correctly. And so more about that next week. And so please invite somebody. I encourage you to share this with somebody. It could help them out. And please check out. By the way, my book, it hasn't out yet, okay? But we're 30 days out. This is like almost the final edited copy. We have the Kevin Harrington from Shark Tank. He's the first chapter. And we have the Jake Miller, who is the fourth chapter. And so they'll both have chapters in this book, which is really exciting. We're super psyched. It's called Building a Tax Deferred Exit Strategy, the proven playbook for unlocking your ideal wealth plan when selling assets of any kind for yourself or your clients. So be looking for that on Amazon coming up in about 30 days. That being said, thank you, everybody, and we will talk to everyone real soon. Bye now.
Thank you both.